Hello and welcome to Market Vibes by CA Connect. Let's dive into what shaped the global economy in the month of October 2025. Starting off with interest rates. The big headline came on the 29th of October when the US Federal Reserve delivered its second rate cut in 2 months, lowering the benchmark range to 3.75 to 4%. The Fed framed it as a carefully measured adjustment to support growth, but they also signaled that future cuts are not guaranteed, especially with the government shutdown disrupting economic data. In the UK, the Bank of England held interest rates steady at 4%, keeping the focus on inflation. Prices are cooling, but too slowly for policymakers to relax. Across Europe, the European Central Bank also stayed on hold. Inflation is now close to 2%, but overall growth remains weak, so the ECB prefers to wait for more clarity before making a move. Moving on to China, the central bank kept rates unchanged as well, preferring targeted support instead of broad rate cuts. The priority remains stability in the property sector and manufacturing. Coming on to inflation, October showed some very different inflation stories. US inflation came in around 3% year over year, but the important story is not the number, it's the direction. After falling sharply earlier in the year, inflation has now been rising for several months in a row, climbing from about 2.3% in March to 3% in August. That uptick makes things harder for the Federal Reserve. It doesn't mean inflation is out of control, but it does mean the battle isn't over. And it raises questions about how many more rate cuts the Fed can safely make. In the UK, inflation stayed high at 3.8%, driven by food and housing. That's why the Bank of England kept rates unchanged. Moving on to the euro area, inflation stayed close to 2%, exactly where policymakers want it. This gives the ECB more breathing room, even as the growth is sluggish. In China, inflation was again close to zero. Low prices sound good, but they signal weak consumer demand, one of China's biggest challenges right now. Coming on to equities. Stock markets in October had a rhythm of their own. The S&P 500 rose a little over 2% in October, marking another month of gains. Tech and AI continued to lead, with strong results from Nvidia, Microsoft, and Meta, giving markets a boost despite the uncertainty caused by the government shutdown. Coming on to the UK, the FTSE 100 gained around 4% and even hit new record highs in late October. Global giants like Shell, BP, Unilever, and GlaxoSmithKline helped lift the index, and a weaker pound made overseas earnings more valuable. Even with domestic inflation challenges, London markets stayed upbeat. In Europe, the Stoxx 600 started October strong but slowed down towards the end, finishing roughly flat to slightly higher for the month. Investors welcomed cooling inflation near 2%, but weak growth kept enthusiasm contained. Industrial and banking stocks saw some movement, but nothing dramatic. Coming to China and Hong Kong, the Hang Seng Index had a difficult month, ending October down around 3.5%. Early optimism around expected stimulus faded, while ongoing concerns about trade tensions and weak domestic demand pulled the market lower. Even EV makers and tech names, which usually lift the index, couldn't sustain earlier gains. Coming on to commodities, gold continued its strong climb through the month. Prices ended up around USD 4,002 per ounce, crossing the USD 4,000 mark for the first time. Even though it pulled back in the final days, it still finished the month significantly higher as investors looked for safety during the US shutdown and ahead of more potential rate cuts. Silver followed a very similar path. It rose steadily through October, hitting one of its highest levels in years, before easing slightly at month-end at $49 per ounce. Strong demand from electric vehicles and solar production helped support silver's momentum. Oil moved in the opposite direction. Brent crude fell steadily from early August into late October, dropping into the mid-60s range. Weak global demand, steady supply, and mixed signals from major producers kept prices under pressure, with only a small uptick right at the end of the month. And then there are soybeans. one of the biggest commodity stories of October. Soybean prices surged sharply, rising nearly 10% for the month. A mix of tight supply expectations and shifts in global trade flows pushed prices to their highest levels of the year. Now to South Asia. India delivered the biggest surprise of the month. India's inflation fell to just 0.25% in October, the lowest level in years. This sharp drop came from a fall in food prices and tax adjustments, giving the Reserve Bank of India some room to consider a rate cut if the economy needs support. Even with weak exports, India's domestic strength remains the anchor. Ahead of Diwali, sales of cars, electronics, clothing, and home goods all stayed strong, especially in Tier 2 and Tier 3 cities. India remains the clear bright spot, driven by its own consumers rather than the global demand. The US government shutdown that began on the 1st of October hung over the entire month. It delayed important data releases and added uncertainty to the Fed's decision-making. Markets, however, didn't panic, but they did react. Gold stayed strong, the US dollar softened slightly, and treasury markets turned cautious. A prolonged shutdown could shave growth off the fourth quarter, which is something global investors are watching carefully. As we move into the final stretch of the year, will the Fed cut again in December or hold back because of missing data from the shutdown? Can the Bank of England and ECB start thinking about rate cuts as inflation slowly cools down? Will China roll out stronger support measures to revive demand? And will India follow up its inflation shock with an actual rate cut? October was a month of two themes: policy easing in some places, caution in others, and markets trying to balance both. Thanks for joining me with Market Vibes. See you next month.